CA Veeraj. Today we'll be discussing the September 25 law paper, CA Foundation, September 25 law paper. If you look into the overall, the marks asked from every chapter, Indian regulatory framework, they asked again 6 marks. Indian Contract Act 36 marks, around the same pattern which is being followed continuously by the ICI. Again, SOGA 17 marks, Partnership 20, LLP again 6 marks, Companies Act 21, again Negotiable Instrument Act 14 marks. The paper is for around totally 120 marks and you have to attempt only for 100 marks. So without any waste of time, we will begin the discussion. So before we begin, if you ask me, sir, how's the paper? What is your overall take on this paper? Is it easy, difficult? What is it? If you ask me, it is compared to the previous attempts, it is easy. It is manageable. It is manageable, very, very manageable. So one or two questions are there, a bit trickier, but except that, rest everything is either from the material or a class material question bank or from the past MTP, RTP, from there only it has come. So we'll begin the discussion of paper. If you look at the question number 1, the first part, Mr. VG and PG were trading in unlisted shares for the last 7 years. They used to borrow the funds from each other whenever required for any trade. See, I'm reading the question paper a bit faster because I know you people have already completed the examination. So they used to borrow the funds from each other whenever they required for any trade. And within a week's time, they used to again refund it back. They're giving some extra stuff here. They were following this practice from last 5 years. Yes, okay. We have no problem. On 25th of January, PG wants to borrow 20,000 shares of an unlisted company at 500 each, but due to insufficiency of funds, he asked Mr. VG for 40 lakh. That means it is like the borrowing debtor-creditor relationship. It is looking like this thing. Mr. VG transferred 40 lakh to PG after about 3 months. It's over. After about 3 months, VG reminded Mr. PG for the purpose of returning that 40 lakh. He asked him to pay back his money. Then Mr. PG told him that he was trying very hard to sell his shares at a reasonable price of 10% more than the price at which he bought the shares, all those things, and unable to sell the shares due to market conditions. Okay. Till now, whatever the questions we are reading, it is looking like the debtor credit transactions. But here, he asked Mr. VG to sell his shares on his behalf and authorize him to appropriate the amount of the loan of 40 lakhs with the interest out of this sale proceeds. So that means it is, by looking into this statement, whatever I'm feeling it is an agency transaction. Yes. So, and if you see here, because now he's asking Mr. VG to sell his shares, that means the PG has already given 40 lakh rupees. Sorry, VG has already given 40 lakh rupees to PG, and his personal interest is also being involved. Everything is there. Now he is asking Mr. VG to sell his shares on his behalf. So it is an agency and authorized to appropriate him the money of the loan of 40 lakhs with interest out of the sale proceeds. Mr. VG has agreed to do so. That means it is an agency which is already created. After 15 days, when market started recovering, PG denied and revoked the authorization by saying that he would sell on his own behalf. Can you see here the first part of the question that is trying to tell that is you sell on my behalf. That means one is principal, other party is an agent, and later he wanted to revoke. Can he revoke the agency or not with reference to the Indian Contract Act 1872, whether the revocation of said agency by PG is lawful or not? If you see here, it is an agency and it is an irrevocable agency because the agency is here coupled with interest, where the personal interest is also involved of Mr. VG, because of which he can't revoke the agency. It is a simple question where almost from our material only question bank, we can easily go through it. Here it is not possible to revoke. And the second question, as I already read the question paper, I'm not getting into the entire reading as I did for the first question. Second part of the question is, here the GS, the famous general store is there in NK Market Delhi. Okay. Got a purchase order for 5 kg of Mambra Badam at 3,400. Look at the cost of it. It is costly. From PK. Here it is a buyer. PK is a buyer. And GS is a seller. Where to deliver at his residence in Rohini. When the delivery boy has come of GS famous general stores at PK's residence, buyer's residence, he found that the door was locked. Okay. I think he was somewhere there. when the delivery boy called him on a mobile phone, he told him to hand over the goods to his neighbor, Mr. Shah. And Mr. Shah was unaware that fact was Mamra was not belonging to them, etc., etc. So the wife, as she always does, mixed the badam with California almond. That means, if you see here, till now, hand over to the Mr. Shah. That means here the PK is uh, the relationship between PK and Mr. Shah becomes a bailiff and bailiff relationship, where the Shah is a bailiff, he has to take care of the goods. When Mr. Shah told her that Mamra Badam was belonging to PK, she again packed 5 kg of Mamra Badam delivered to PK. Okay, because whatever the mixed goods which is given by which is done by the Mrs. Shah, she again packed 5 kg of mixed badam and delivered it. The fact came to light that when Mr. PK returned the packet to GS famous general store by saying that it was not up to the quality, because here PK has ordered Mamra Padam, but without without having any knowledge regarding that it is belonging to PK, Mrs. Shah mixed with the other goods. That is why PK also don't know that it is being mixed by the neighbor. And they went to the end. He refused to accept the packet. In the above circumstances, what is the remedy available to PK according to the provisions of Indian Contract Act 1872? Here the concept it is the bailment contract. When the here the Shah has become the bailee, when the bailee is there acting on behalf of the bailer, the primary conditions here, the duties of the bailee is he has to take care of the goods as the goods belonging to his own. Reasonable care he has to take care. So this is a case which is happening. PK order from GS stores again delivered to neighbor, because of which it is mixed by the thing. So the answer should be, uh, can he recover the remedy available to PK? Can he, what is that? Ask to cancel the contract with GS stores? No. With respect to GS stores, PK does not have any right, because GS store has delivered entirely correct commodities. But it is now PK gets some rights with respect to the neighbor, remedy with respect to the neighbor. What against the neighbor? What is that remedy? That he can, if the goods are separable, able to separate, then they can bill. What is that? Bill has to bear the cost of separation. If it is not able to separate, then the entire loss has to be borne by the bail itself. Here, the PK will not get any right. The conclusion is PK will not get any right with respect to GS stores, but he will get the right with respect to the neighbor. That's it. Simple question only. And look at the second option, question number 1B. Do you agree the company is an artificial person? If you see, it's almost a direct question. Company is artificial person. Yes, we have seen in our class also that under the characteristics of the company, company is an artificial person which is created by the law. And because it is a person which is created by the law, it will also get all the rights, all the duties, all the powers as the normal person does. And it also says what company can do, what company can't do it. Because it is an artificial person, you have to write that it is created by human agency. All those things has to be written. And this is the first question. And they're asking elucidate. We have to explain it. Also explain. That means it's the second part of the question. For that, 2 marks are there. How the authorization by Beta Limited, a company incorporated to company site 20,000 can be made in case of company does not have a common seal. First of all, you should tell that common seal. What is common seal? Common seal is an official signature of the company. Yes, sir, it is an official signature. But from Companies Amendment Act 1516, where the common seal has made an optional. When there is no common seal, company does not have the common seal, then the time can be, or it can be authorized by way of either signing of 2 directors or 1 director and 1 company secretary if the company has appointed a company secretary. Very simple question, direct question. Straight away, this Companies Act question should be that 7 marks into your pocket. There is nothing complexity. One with respect to, you have to explain artificial person, what it can do, what it can't do. It is a human agency created by law, all those things. And you have to explain this signature, common seal. It is signature of the company. It is optional from 1516 Companies Amendment Act. Then when because it is optional, it can be authorized by 2 directors or 1 director and 1 company secretary. Very simple question. And third question, ABC are the partners in an unregistered partnership firm named ABC Associates. Is the suit maintainable in the following cases? Okay, they have given some 3 questions here. Based on this is, we have to answer that. When it is an unregistered firm, there are some limitations or drawbacks it suffers from. We will see the questions and we have to give the justification also. A filed a suit against B, who has stolen the goods of the firm. Can A file the suit against B? Here A, B are the partners. See, first of all, when it is not registered, generally they can't sue one another. They can't go for the contractual suing part. But because it is a stolen part, it is a criminal act. There is an exception. Even the firm is not registered, the partners will get the right with respect to the suing of 3 things. Yes, because it's a criminal act, they can sue. Normally, it is no because it is a criminal act, they can sue. Second one is A filed a suit against Mrs. ABC Associates for claiming the share of the assets on the dissolution. Can he file a suit? Generally, no suit can be filed, but under there are three exceptions where they can file the suit. One is for the purpose of dissolution as well as requesting the share of assets. Second one is settlement of the accounts, and third one is for the purpose of criminal act, which we discussed in the first one. Three exceptions. Yes, they can sue. Now M filed a suit against the firm ABC. Here, ABC are three partners. Who is M now? Who M is an outsider. Okay, and associates for the recovery of 10,000. Can an outsider sue the firm when it is unregistered? Yes, the firm will not get the right to sue, but the third party can anyway sue the firm. Yes, he can sue for 10,000. M also owed 4,000 to firm, and firm is asking to claim for 4,000 set off. Can they do that set off? Actually, third party can file a suit against the firm. Yes, it can be filed. But with respect to the set off, second part of this third question, there is no set off option available because if the firm is unregistered, if you aware about it, any claim with respect, any set off with respect of more than 100 rupees, it is not possible. That is why this 100 rupees, more than 100 rupees is there, 4,000, that is not possible. It is also a simple question, which is from again our question bank itself. Again, the next question is there. Here, X offered to sell a machine for 5 lakh rupees, but Y refused to buy it. That means here it is an offer to sell. It is not to sell, but it is agreement to sell. Yeah, Y X is a seller, Y is a buyer. Y refused it, stating that unless until it is in a running condition, X don't want to buy it. That means there is some condition that has to be fulfilled to making it offer agreement to sell as sale. X agreed to do the same. X agreed to do the same while the machine was being repaired. It was destroyed without the fault of any person. That means buyers is also having no fault, seller is also having no fault. When there is no fault of anybody, then who is having the ownership has to bear the loss. Here, did the sale happen? No, sale has not completed yet. With reference to the relevant provisions of Sale of Goods Act, examine whether X can recover the price from Y. No, because it is an agreement to sell, they can't recover. Sir, when under what situation it could have recovered? Uh, when the agreement of sale has become the sale, then it could have recovered. When the agreement of sale becomes sale, either on the fulfillment of certain conditions, that is in this case it is a repair, or on the future date. Here it is not there. So that is the first part, very simple question. And again, the second part is also same. For the purpose of making the uniform for employees, VK bought dark blue colored clothes from PK, but he did not disclose the PK the purpose. That means he did not rely on the seller skill, judgment, all those things. He bought it. That means here the case could be let the buyer be aware that caveat emptor. When the uniforms were prepared and used by the employees, the cloth was found unfit. Okay, when it is unfit, however, there was an evidence that cloth was fit for caps, boots, etc. Advise VK whether he is entitled to any remedy. No, he is not getting any remedy. It is there is no implied condition because the with respect to quality of fitness, because the buyer did not disclose the fact why or the purpose for which he needed, because of which it is not an implied condition or no implied breach of warranty because of non-telling of the quality of fitness. It is also a simple question. Then again, the one more Companies Act question, which is very, very straightforward and easy into your pocket. Again, I'm telling 14 marks from the Companies Act to our direct questions. It should be easy. So explain the MOA and AOA. You have to explain of the company. Also explain three differences between MOA and AOA. It is just the copy paste of the material one. You can the direct question. No need to waste the time on this. It is 7 marks, easy question. Then again, see this question. Second question, C part. It is LLP part. Generally, till now, the institute is to ask direct questions on LLP. But here, this time they made one case study. That's okay. That means you should be prepared for everything. You should not be making any what's that preemptive judgment that it will be only direct questions or indirect questions. You should be ready for anything. First one, five close friends decided to form an LLP. Okay, some LLP name is there for educating poor children as a non-profit organization. First of all, looking into this question, the second line you should make into a conclusion that the LLP can't be formed for non-profit organizations. That is no. They were Mr. A non-resident, B is also non-resident. That means two non-residents are there. C, D, E are the resident persons are there. Okay. Uh, Two non-residents and three. What's that? Two non-resident and three resident. Here, okay. it was decided that A and B will be appointed as designated partner. Who are A and B? A and B are two persons are non-residents. You tell me, something should be striking to your mind now. Sir, what is it? Whenever a LLP has been formed, there should be at least two designated partners, out of which one should be resident. One should be resident. Sir, and it should be sorry. Once you yes, out of two parties, one should be resident. When I say resident, at least he should be staying in India for 120 days. Here, when I say both are non-resident, it is not possible. With reference to the provisions to LLP, answer each of following question: whether this LLP can be formed for above purpose. No, first of all, NPO purpose can't be formed. Whether A and B can be appointed as designated for this also no, because they are two are non-residents. Then, if third question could also been there, if it is for more than 6 marks, what could be the question? Suggest the possibility of designated partner. Then you can keep either A or B, and you can add C, D, E. Either you should keep one from the non-resident and other party should be the resident party. The third question, here also again, there is a partnership at will which is formed by XYZ in January 22. Now, X is a senior partner, he want to retire, okay, and transfer the shares to the firm of his firm to his grandson who is 17 years of age. That means he is a minor, okay. When they came to know that Miss S is minor, they were, 17 years of time. Y and Z were not interested in this, but when they came to know that S is a minor, they agreed to admit him. That means with the consent of other remaining partners, he is admitted. Can he become the partner? No, minor can't be admitted for the as a partner, but he can be admitted only for the benefit. I think that would be asked in this question. Mr. S was a partner as a partner, so it is wrong. On 5th of October 23, at the time of inspection of books of accounts, S noticed that the books of accounts were displayed only small amounts of profit. That's okay, in spite of huge turnover. When he asked the other partners, they told that Mr. T, one of the our clients, has to pay huge amount of fees, but it has not received. S decided to sue T for recovery of the fees. Can S sue for T? No. Partner can sue the third party, but because he's a minor, he can't sue the third party and sent a notice for T for argument. But T told that S can't sue him because he has not given a notice remaining partners and attaining a majority. That's okay. So yes, Mr. T is correct. They can't S can't sue because he's just admitted for the benefit of the partnership firm. That is why it is not possible to sue. The questions are whether X can retire. Yes, he can. Anybody can retire because it is a partnership at will. He can retire and introduce S minor as a partner. No, minor can't be admitted as partner, but he can be admitted only for the purpose of benefit of the partnership firm. Yes, has a right to inspect the books of accounts. Yes, if it is with is appointed with respect to consent of all the other partners. Yes, he has a right to inspect the books of accounts. Yes, has the authority to sue. No, he has no authority. Then the next question. Okay, I think this question on the Companies Act is bit containing out of the syllabus points. Generally, this is based on the Section 18 of the Companies Act. Mr. RM engaged in the trading of handloom with his wife, etc. They are given, suggested to form the private limited company by capitalizing their business, corporatizing their business, and could gain their better recognition, etc. They established RM Private Limited as they established the private company, both as a sole member. They got work order on job basis, location okay, all these things are okay. The company also secured a line of credit from the bank amounting to 30 lakh rupees. Okay. Tragically, RM met with an accident and passed away. Now, Mrs. RM was the only member in the private limited company. A family friend suggested including his brother as a member, but she declined because I think she does not wanted him to become the member. Instead, she decided to convert private company to OPC. Generally, what we do is OPC to private company conversion we have seen in LLP. In company. Here they are talking about private company to OPC. Can they convert? Yes, they can convert anything. And nominate her brother AK, who is currently employed in UK. That's okay. Examine with reference to that whether RM's decision to convert private limited company to OPC is it legally valid? Yes, it is legally valid. She can convert. When Mrs. RM decisions to nominate her brother AK was nominee is not legally valid. Okay, before that, if you see here, her brother AK, who is currently employed in UK. That means you would have known that whenever somebody want to become the member as well as nominee of OPC, then there are some conditions. They should be natural persons, Indian citizens, along with that Indian citizen natural person. Earlier, there was a condition, now it has been removed. Whether they are resident or not, now it is being told it as whether they should be resident or not. Now I'm assuming that nominator brother AK, who is currently employed in London, UK. That when I say currently employed in UK, that means indirectly they're telling that earlier he was there in India. That means is an Indian citizen, because of which is possible to nominate. Yes, convert legally valid. When RM's decision to nominate our brother AK was nominee is not legally valid, depending on whether uh, depending on the this one, whether he is an Indian citizen or not, or resident or not, there could be two answers, because there is a recent amendment, whether resident or not, it is possible. Then the third one is ABC are co-sureties. The question will directly told they are co-sureties for a loan of 4 lakh taken by R. Okay, R is a principal debtor, ABC are the sureties from XYZ. That means they are creditors. These three, there are three bonds specifying the different limits for the each surety sum. A liability is limited to 1 lakh. Okay, B is limited to 2 lakhs. C is limited to 4 lakh. Due to financial difficulties, R defaulted. That means principal default debtor defaulted, and the bank seeks the recovery of amount from the sureties. Okay, when the principal debtor defaulted, then the creditor should go for sureties only. As per the Indian Contract Act 1872, you have to answer things. Analyze and determine amount each co-surety ABC is liable to pay. Okay, first of all, we should think from normal angle. They agreed that they'll give 1, 2, and 4 lakh. Generally, as per the Contract Act, all the co-sureties are equally being liable, but subjected to the maximum liability, whatever they have taken as maximum liability. If this 1 lakh, 2 lakh, and 4 lakh was not there, then it could be equal. That means 4 lakh divided by 3 between ABC. Because if they already told 1, 2, and 4, now we will try to write it. Because they already gave the liability of A, B, and C, that is 1, 2, and 4. Analyze and determine each co-surety. Here, how much liable to pay? A is liable to 1 lakh. Yes. B and C is having 2 lakh and 4 lakh maximum liability. Now, if out of 4 lakh, if A can bring only 1 lakh, then remaining 3 lakh should be bifurcated between two parties, B and C. How much? We have to see the B's maximum liability taking capacity, that is 2 lakh. That means 3 lakh can be divided between equally 1.5 and 1.5, because that is well within the limit. So yeah, because of that, I can say that A will bring 1 lakh, B will bring 1.5, C will bring 1.5. What will be your answer if the loan amount was 6 lakh instead of 4 lakh? Then again, we have to see that if it is 6 lakh, what is the maximum liability they can bring? 1, 2, and 4, 4 to 6 and 7. That means again, A will bring 1 lakh, B will bring 2. Remaining 3 will be bought by C. Again, this is also a simple question based on two provisions. One is the liability of the co-sureties will be equal if there is no agreement. Because it is subjected to that agreement 1, 2, and 4, it is limited now. Then the next question, with reference to the Contract Act 1872, we have to answer the following questions. X visited the Cosmo Mega Mall at Nagpur, which was variety of items and day-to-day use. The mall was a self-service system. That means, can I say that nobody is offering? It is just displayed. If you want, you can go pick it and get it. I can call it as invitation to offer. Mr. X took the basket, picked up on the different items of his choice, and reached the cashier for payment. That means he's what is that? Who is that person? Mr. X is offering to the cashier that he want to buy. Cashier accepted 9 items out of 10 and did not accept the remaining one. That means he accepted nine items. One item is rejected. Item which was at the highest price of 10,500 among the 10 items. That's okay. Decide as per the provisions of ICA 1872 whether Cosmo Mega Mall be compelled to sell the said article to Mr. X. No, because it is invitation to offer is different from the offer. Now the offer is being made by Mr. X. Whether to accept or not, it is up to the cashier. Because he is rejected, it can't be compelled to sell the article. Simple question only that also. Then the next question in that same only. The question is simple. It is there. As I already know the question, I'll just give the gist of this thing. AT and Mr. AT as well as Miss Priya recently got married, and because he was a renowned company in USA, he promised his wife that he will send 30,000 per month on a daily routine expenses. And he went to USA, but never sent any money to his wife. That means his intention was never to create the legal relationship. That's okay. She was facing a severe financial issues regarding the rent and other maintenance expense, because of which on 20th, during a telephonic discussion, 80, she came to know that that would be never sent her money. That means his intention was never to create that legal relationship, and he does not want to send the money also. Due to her financial hardship, she decided to file a suit against him for 7,50,000. Whether she would be able to recover any amount? No, because it is natural round of action that no intention to create the legal relationship. They can't recover the money. She can't recover the money. Then comes question number B. It is not trickier, but you have to use your uh, negotiable instrument is an instrument which is freely transferable, yes, from one person to other party by mere delivery. That means they're talking about the bearer instrument, and by endorsement. That means order instrument, delivery and endorsement. Endorsement and delivery. Classify the different types of negotiable instrument according to the manner which is made as per the provisions. When I see this line, I feel they have to write every entire different types of instruments, order, delivery, other instruments. But because as per the provisions made above, I'm feeling that it is based on the above provisions only. How to explain this order as well as bearer instrument. It is for some marks. Then this is also direct question which is being copied pasted from the material. Define the law and explain the various source of law. Constitution of India, state legislatures, all those things you have to explain. Then the next question, uh, it is again based on Soga. Yes, visits an electronic store and asks a laptop suitable for high-end graphic design work. Salesman recommends that specific model. Okay. Assuring that it will work meet the needs. That means yes, told buyer told that for what purpose he has wanting the laptop. That means he has made known the seller the purpose. Relying on the seller's advice, he purchased the laptop. However, after using it, she realized that laptop lacks the necessary processing power and graphics ability. Okay, can S Mrs. take the legal action against the seller under the Sale of Goods Act? Yes, because there is an implied condition when you relied on the seller's this thing you made known that the purpose of for which you want, you can resign the contract. It is a breach of implied condition. You can resign. Then the next question is based on the pledge. The pledged goods again sold it to some jewelers. These things is there. That's okay. It is a simple question where it is regarding the title. Who will get the better title? After reading question, you will understand that the better title will be given to the pledge himself. And here, next question is there's a partnership act question. SR Enterprise, well-known trading firm. AM was a former partner. That means he retired from the partner 22, but never made any public announcement. Where, see, if you see, every partner is liable when he is retired until unless the public notice is given. Yes, it is there. Mr. R, a supplier, entered into a business transaction with Mrs. SR Enterprise, believing that Mr. AM was still a partner. Yes, he is right. He'll be a partner by holding out because they never made a public announcement. Partner of the firm. He relied on the AM's past association with the firm. Yes, that's okay. Credit line to the firm. Based on that, he gave the firm. When the SR Enterprise defaulted on the payment, R demanded to Mr. AM. Can he demand? Yes, he can definitely demand because R does not know that AM already retired because he has never given the public notice. And AM told refused that, stating that he was no longer a partner. No, no, no. All these things is not possible. Whether Mr. AM will be held liable? Yes, he will be held liable because public notice is not given. Simple question again. Here again, it is dependent on the Partnership Act. LMP associates a partnership engaged in the carpet of manufacturing export. That's okay. Partners LM and P on 25th August 22 admitted Mr. G, an expert in carpet manufacturing, as a partner. That means they admitted a G as a partner. However, on 10th January 24, G was accused of unauthorized activities and subsequently expelled from the partnership firm. That means it is about the expulsion of a partner. Can the partnership partner be expelled from the firm? Yes, there are some conditions that has to be fulfilled. With the unanimous approval, this is the important point that has to be noted. We have to answer the three questions. There are two questions. Examine whether action taken by the partner was justified. Yes, if the conditions are satisfied. Sir, what are those conditions? If it is as per the agreement contract and it is expulsion is done by majority of the partners, and the majority of the partners has to expel the other partner in a good faith itself for the purpose of benefit of the partnership firm, and before expulsion he should be given an opportunity of being heard. If these conditions are fulfilled, then it is valid. What are the factors which would be kept in mind prior to the expelling the partner. Yes, you have to write these points. Okay, state with reference to the provisions of ICA whether true or false. Okay, the pledge of document of title to goods by a mercantile agent with the consent of an owner is invalid pledge. No, it is false. It is valid pledge. A appointed B as his agent. Okay, principal and agent is there to sell A's land. Subsequently, under the authority of A, B appoints C as his agent. Okay, that means it is a sub-agent. Later on, A revokes the authority of B, but not the authority of C. Consequently, authority of C can't be terminated. What is this? No. When the agent is appointing the other party as sub-agent, then the moment the agent's authority has been revoked, the sub-agent is automatically revoked. Because of which it is also false. If the agent is removed, sub-agent is also goes away. The contract of life insurance is not fully covered under the contract of indemnity. Yes, the other insurances are covered because life insurance, you can't just say the money and give the money and tell that this is your life's worth. No, not possible. That is why it is true. It is not covered. Then the question on negotiable instrument is there. K draws a bill is a drawer which is payable 60 days after sight. That means it is a sight bill to Mr. J. Mr. J holds bill for 30 days before presenting it to N. That means the try and is a holder. N accept the bill upon the presentation. Okay. Decides as per the provisions of Negotiable Instrument Act when does the maturity period becomes will commence. Because it is a after sight bill, it will be liability maturity commences from after presentment. Because it is 60 days after sight, it is presentment plus 60 days. Because it is a time instrument, you have to add 3 grace days also. A promissory note made payable at a specific place on a fixed date. The holder of Mr. Mohan presented a note for payment 2 days after. Oh, that means there's a delay in presentment due to unforeseen circumstances. When it is unforeseen circumstances, yes, the delay can be made justifiable. Decide on the following provisions whether negotiable instrument act. Does the delay in presentment affect the Mr. Mohan's right to recover the amount? Generally, no, because of the unforeseen situations. Under what circumstances can a delay presentment be excused? Because it is unforeseen, for example, flood, tsunami, all those things. Section 75, you have to directly write that. Consent is said to be free when it is not caused by fraud. Okay, you remember that 5 cases when the consent is said to be free when it is not caused by coercion and influence, fraud, misrepresentation, mistake, all those things. Yes, here it is. Yes, that is right only. According to the Indian Contract Act, answer each of the following. What do you mean by fraud? You give the definition. It is an intentional act to deceive the other party, all those things, or to get unjust advantage. What would be the effect of fraud upon the validity of the contract? It is voidable. The moment it is fraud, it is voidable. And the state the instances which the contract is not voidable. That means even it is fraud, it is not voidable at the option of the party who is aggrieved. When it can be discovered that by an ordinary means, if you use your minimum common sense, you could easily discover that it is a fraud. Then if you don't use that, then it is not voidable. Or if it is, if the other party has not induced you to give the money, then also it is not voidable. Some conditions. What's the meaning of term quantum merit? Quantum merit means very simple, as we discussed in the class. As much as you work, explain any 4 cases when quantum merit can arise. That's how you can write those 4 situations. The last question, but not the least, contract of sale resembles with the contracts. No, contract of sale does not resemble as contract. It is totally no. Of hire purchase. No, sale is different, hire purchase is different. However, sale is distinguished from hire purchase. Okay. Explain the hire purchase agreement and state any 5 differences between sale and hire purchase. Okay, you can write about the ownership. Ownership in the sale transfers immediately. In the hire purchase, it will be transferred after payment of last installment, return, and insolvency. Yes, all those some 4-5 points. It is direct question. You can easily write it. If you ask me on an overall basis, yes, the paper is easy, but 1 or 2 questions that Companies Act conversion of generally we have seen OPC to private company, but here the private company to OPC is there. That is bit because some 10, 15 marks can be manageable, but remaining paper is what's that? I can call it as easy. It can be easily understood. If you felt this video is what is it help you in a manner regarding analysis of question, analysis of paper. Yes, we just not looked into what is this, what is this. We even discussed the answers also wherever it is possible. If you felt it is helpful, please hit the like button, subscribe to the channel, and don't forget to hit that bell icon. Thank you. Bye.